Markets are tired of a constant anxiety over tariffs. After several tense weeks, fewer traders believe that Donald Trump's threats will become reality, at least not in the form they were initially announced. The situation increasingly resembles a joke. When Trump says and Trump does, there are two different people. Moreover, U.S. retail sales showed their worst performance in 2 years, dropping nearly 1% in January. As a result, the U.S. dollar weakened for several reasons, but the key factor was still the economy. Let us see how the statistical data that will be published on February 19 could affect currency trending. You're watching Traders Calendar. Last week, Wednesday, opened and closed with the US crude oil inventory reports. However, this time, the weekly data from the American Petroleum Institute and the US Department of Energy will be published on Thursday. Meanwhile, the trading session begins with the statistics from the Asia-Pacific region. Among the currencies in this region, the yen draws the most interest. Considering that the Bank of Japan plans to continue raising its benchmark rate, the yen is gaining more popularity among traders against the backdrop of Donald Trump's threats to impose tariffs on most countries. The yen is currently occupying a safe haven niche. The Japanese trade balance report may unveil that exports more than doubled in January from 2.8% to 7.9%. A strong signal for the yen in its confrontation with the US dollar. However, it would be premature to talk about a stable positive trend in the Japanese economy. There are too many external and internal obstacles. Among them is a weak demand from China, although machinery and equipment orders in Japan grew in October and November. The December report is expected to show a decline. Moreover, analysts predict a significant drop from 10.3% to 6.6%. It seems that the yen is for a volatile trading session. A tense period awaits one Pacific currency as well. The Reserve Bank of New Zealand is set to announce its key rate decision. Over the past 6 months, the rate has been cut 3 times, including twice by 0.5%. Since August 2024, the rate has dropped from 5.5% to 4.25%. Economists predict another rate cut by the Reserve Bank of New Zealand in February 2025. As a result, the New Zealand dollar is expected to lose value. However, volatility may increase during the press conference by the central bank governor Adrian Orr. Antipodian currencies may find some support in China's statistics. In China, house prices may show a slight increase of 0.3%. Although the indicator remains in a negative territory, an upward trend has been emerging since November. If the January data confirms it, market sentiment among oil traders will also improve. The Bank of England cut its rate in February of this year, bringing it to 4.5%. The upcoming January inflation report may give policymakers cause for doubt. Annual inflation in the UK economy is expected to climb to 2.8%. Since the previous increase of 2.5% matched the Bank of England's forecast, experts will likely trust their predictions. Core inflation is also expected to accelerate to 3.7%. Thus, we anticipate price growth and the strengthening of the British currency, which typically supports the euro as well. The rise of currencies from the US dollar index basket may continue into the US trading session on Wednesday. The United States will disclose its data on the construction sector, including building permits and the housing starts. Forecasts suggest that the number of building permits issued to Americans will continue its decline from December, dropping to 1,450,000 in January. Consequently, the six-currency US dollar index may also weaken. A volatile evening is expected for the Russian ruble. Last week, the Bank of Russia left its key rate unchanged at 21% for the second time, leaving the currency without support. However, an increase in a producer price inflation forecasted at 8.2% for January and could restore the ruble's growth momentum. The release of the US Fed Reserve's January meeting minutes will be the most important news for the currency market this day. The outcome of that meeting was the decision to keep the benchmark rate at 4.5% per annum. However, the minutes include the opinions of all Fed Reserve members who participated in the vote, along with a dot plot reflecting their expectations for future rate auctions. FOMC minutes typically trigger significant volatility in the US dollar and its rivals as well. Please note that the time of all mentioned above publications is set in the GMT+3. The next video review of a trader's calendar will be released on a Wednesday, February 19th. We wish you profitable trading and see you soon!